You had phrase, I think, of the last 12 months, that disinflation is transitory. Could you just tell us what was behind that call and where we are now?
Well, yeah, I think, the two things can be true at the same time. That in 21, 22, you did have this transitory part of inflation with the supply chains normalizing, and on CPI that produced 9%. Then it came down. But I think once we got rid of that transitory inflation, what we're finding is that we're probably stuck in a 3% inflation world. So we're not going back to where we were pre-pandemic. We are in a higher nominal growth world. We are in a higher inflation world. But again, it's a 3% inflation world, which means elevated interest rates, but nothing like Zimbabwe or anything like that.
Well, let's talk about the elevated level of rates that we should be used to. Nothing like Zimbabwe. Yeah. What should it be like?
Well, I think that what we're looking at with a 4.50 yield right now is probably pretty close to, I'm talking about on the 10-year yield, something normal. This is about normal-ish. Anything lower than that would probably come about with weakness in the economy, and if the economy was to show more signs of inflation or strength, you could probably see us push back into the 5 handle again.
We've got to talk about what this means for the bond market more broadly as well. You've got a piece in the FT out this morning. The headline is, "The total return strategy in bonds is far from dead." What prompted this particular one?
Bill Gross wrote a piece last week, and he said that total return strategy is dead, and I took issue with it to say that a certain style of total return strategy is dead.
Just explain that.
Yeah, so in the bond market, Bill Gross, PIMCO, they really developed the idea of total return. You buy bonds to get a coupon, a yield, and then you also have price appreciation. The two of them is total return. For the last 40 years, the total return strategy has been driven by lower interest rates and ever higher prices. Well, that era probably ended in 2020. But that doesn't mean that bonds as an investable class or a total return is done. There's a big yield in the bond market now, a 5% yield. You could start off every year saying, I can get a 5% yield, and if you manage around that properly, you could maybe do a little bit better than that, or a little bit worse if you don't. But I think there is strategies in the bond market that can still be very profitable.